we think the first half will be better than the second half.
So stronger first half.
And so this is a framework. And I think too many investors think that this is a hard prediction. There are probably room for more positive surprises in the first half.
Thomas Lee, co-founder of Fundstrat, predicts a strong start for Bitcoin in 2025, with more upside expected in the first half. He cites optimism from a pro-business U.S. president, a supportive cabinet, and the Federal Reserve's decision to lower interest rates, which is likely to boost markets. Key areas to watch include financials, tech stocks, industrials, and Bitcoin. Stick around for Lee's 2025 forecast.
We have an incoming president that's very pro-business, probably the most pro-business president in modern times. And with so far the cabinet selections that the market is very happy with. So that should be providing room for investors to become optimistic, which they call animal spirits. And the second tailwind is the Fed is dovish. And what that means is the central bank is easing. The third is investors are cautious because almost everyone we talk to, including you, think that valuations are expensive, or because we've had 2 good years, next year has to be bad. So we know sentiment is cautious. Usually when people are cautious, then you bet against the caution.
I didn't say valuation expensive. It's not cheap. But anyway.
Yes, I'm not sure there's a difference. But and then the fourth is that we know mechanically there's a lot of cash on the sidelines.
Okay.
There's a lot of firepower. $7 trillion of cash on the sidelines. So I would see this as positive for the first half of next year.
Okay.
Yes.
But what you're saying is that the momentum is still here. There will be a lot of positive surprises. A lot of the good news will be more reflected in the first half than the second half. Yeah.
Yes.
Okay.
And then the second half, it's more just looking at precedents, because since 1870, there have been 5 previous instances where the major index had 2 years of 20% or more gains in a row.
Okay.
And 5 of the 5 times, the market did poorly in the second half.
Okay.
So we might make the gains in the first half. However, that is just history, so we could do a lot better than that.
Should we worry? I mean, obviously there has been a Powell put, right? So protecting some downside this year. Next year, if we get some positive economic growth, the Fed would be pretty slow or backloading the interest rate downward cycle. I mean, is that something to be aware of, or is that more, we should take it more positively?
Yeah, well, it's a very good point you're bringing up. The bond market is pricing in 3 cuts next year. So they're expecting the Fed to make 75 basis points worth of interest rate reductions. Now, the current Fed funds is 4.75%. And neutral, let's say, is 2.75. So that's actually 2 percentage points of easing the Fed has to do, which is about 8 cuts. The question that markets have to deal with is how many of those 8 cuts happen in 2025? So they expect 3, which leaves 5 left for the rest of the easing cycle. I think the best case is the Fed to only do 1 cut next year. Because that leaves 7 cuts in the future. Which gives them a lot of firepower. So I would prefer, but it's not a prediction, to see the Fed pause, and the market might initially get worried, but then they'll realize it's quite bullish.
But that's eventually a sign that economy is strong and there is no need to cut the interest rate.
Well, they have to cut because look at Fed funds versus the rest of the world. I mean, Europe is 150 basis points lower than the Fed. So I mean, it's going to put a lot of pressure on other central banks if they don't do something.
What are the sectors, companies you like?
Well, our overweights for next year within the equity market, number 1 is financials.
It's been good rally past couple of months, right?
Yeah, and that's our number 1 sector. Number 2 is industrials. and number 3 is technology.
Okay. So tech plus cyclicals.
Yeah.
Okay.
But we also like small caps
Okay.
and Bitcoin. So if I had to say what is our number 1 ideas, it's really financials, small caps, and Bitcoin.
And can you give us reasons why you like, why you believe that financial will continue to run?
Well, financials have been suppressed because of what I'd call financial repression. The Fed's been tight, so they're easing, and the bank stocks have done poorly since the pandemic. So there's a big catch up there. The Trump administration is going to be pro deregulation and also reduce the barriers to mergers. That's capital markets activity. That's bullish for financials. And financials, of course, are pretty sensitive to overall economic activity picking up. So that's why we like financials.
What do you think is the best way to play the long-term AI theme? Is there an ETF or any group of stocks that you would recommend?
The market's pretty good at figuring this out. So I would say the Mag 7 are all in a what I call a primary position to benefit.
Yeah, that's true, yeah.
And we know that NVIDIA is got a vast lead over others. And we also know that there's going to be critical shortages of power and components. And so these aren't necessarily the best quality companies, but they're the ones that can deliver power and components quickly. So I think that that's the correct way to play this right now. But over time, the real winner are going to be companies that can drastically change their business models because of AI.
AI's market value is set to reach $1.3 trillion by 2030. But its centralized development model limits innovation, excludes users, and raises privacy concerns. This opens up significant opportunities for crypto to drive decentralized innovation alongside AI. Blockchain can ensure privacy, incentivize participation, and allow developers to create AI applications tailored to users. As AI evolves, crypto will play a key role in shaping its future. Now let's hear from Thomas Lee on the current importance of Bitcoin and crypto.
You know, in reality, in this conversation, nothing I say will change a skeptic's mind. So I think that it's probably better to just observe a few things. One is Bitcoin has now been around for 15 years, and there has not been a Bitcoin 2.0. So there's no crypto 2.0. This is Bitcoin is the surviving chain. And Bitcoin has become a $2 trillion asset, which never in history, financial history, has anything reached $2 trillion and then disappeared. So we're not, it's a different argument if it was $100 billion.
Okay.
The third is the US government is reiterated its commitment to make Bitcoin a strategic reserve asset. That's not bad for the price of Bitcoin. So if someone is watching this and said, well, they don't understand Bitcoin, so they decide not to own it, it's a catastrophic way to look at markets, because we recommended Bitcoin originally when it was around 1,000, and we recommended investors put 2%, and many people said they won't buy it until they understand it, and then we'd spend 2 years explaining to our clients why they should own some Bitcoin, and they still refuse to buy it. So I don't think, if someone is not going to buy Bitcoin till they understand it, they may end up missing one of the biggest opportunities in their lifetime. I think many are just recognizing that they're being obtuse, in the sense that they're being stubborn to be skeptical of it. I can tell you, people had many arguments against it for years. People said, oh, it's a Ponzi scheme. It only goes up because of the creation of stablecoins. Or people said that Bitcoin is going to go to zero one day. Or they're going to say that, well, why doesn't someone create a new Bitcoin? You know, I would say that it's the same attitude people had for stocks since 2009. At JP Morgan, we had made the argument in 2009, and this really helped us become very well known among the institutional world, was that we had said in February of 2009 that a new bull market was starting, but one that we think could be quite significant, you know, that could last for decades. And we had shown that the bear market that was taking place was actually in severity almost as bad as the Great Depression. Many investors were skeptical for years. If you recall, from 2009 to even 2014, people said that was just a fake bull market due to the Fed, and they thought we'd eventually go back to 600 on the S&P. Well, by 2015, many people lost their jobs because they fought a bull market that had almost tripled in price. I think that's what's happening now in crypto, because as much as people saying it's not a legitimate asset class, the fact that the U.S. government's about to buy it really changes the discussion.
Missing out on Bitcoin could be the biggest financial regret of a lifetime. While skeptics hold outdated views, Bitcoin has become a $2 trillion asset and is recognized as a potential U.S. strategic reserve. As Tom Lee notes, those who passed on it at $1,000 are likely still sitting on the sidelines today. Don't let stubbornness prevent you from seizing this transformative opportunity. Bitcoin is here to stay. See you in the next one, and all the best.